Okay, Chantal, I know you hear me. My mic's on. Have you started streaming? Okay, thank you. Okay, streaming started. Okay, thanks everyone. Welcome to the Beige Book, 10-Minute Trades Trade Room. My name is Lee Goldstein. I'm the trading director for 10-Minute Trades. Please remember that all the trades we discuss are for educational purposes, and it is possible to lose money trading futures, so trade carefully, please. Okay, so the Beige Book, you could say that this is probably one of my, it's a trade that I've always liked over the years. And it's an event that I'm sorry to say, every now and then it trades well, and then it stops having an effect, and then it'll trade okay. So it's really because I'm a lunatic and I can't control myself, and I just desperately need to watch reports or my life doesn't feel fulfilled. And that's why we're here. I just, look, the bond report, we came up with a way to try and make money, and we made money. Earnings, we're coming up with ways we try to make money, and we do make money on a lot of the earnings. The Beige Book, I probably shouldn't have had the room, to be honest. I could do some of this testing alone. I don't have to subject all of you to the testing, but ultimately I think the testing really helps. And I think if we do this over and over, it definitely makes everybody a much better news trader, an event trader, because there's so many different possibilities about how and why these reports move the markets. I do want to thank everyone that's watching us on YouTube. So if you're out there watching us, hit the like button, please. We'd really appreciate it. And let us know you're out there. So what are you going to do with Beige Book? Let's go back and look at June. I don't even know what happened on the June report. I don't remember watching this one recently. I know what the last two Beige Books have done. Hang on, folks. One second. Okay. So Beige Book in June, it's a 2 o'clock event. It is a Fed report. Let's read what the Beige Book is. So if you go to Forex Factory, and you can pull up, I go to calendar, and then I just scroll down to today, and we can pull up the Beige Book. There's a lot of Chinese news tonight. You'd think that we'd be trading that Chinese news. It just doesn't move the copper market reliably. And it's unfortunate. If we could get Ninja I've ranted before about Ninja not having the proper index. They need the Hong Kong index so that we could trade the mini Nikkei. I think it's in the Hong Kong index. I don't think there's a separate Japanese index. I think it's all part of the Hong Kong. They don't, whatever it is, they don't have the right index. There would be so many Japanese news reports and Chinese news reports that we could probably trade. It is unfortunate because copper is a very poor proxy. It's not good like the NQ is for some of the earnings. But this news just doesn't move copper very well. It's very inconsistent. Never been able to get a setup for that. And you'd think it would be incredible. Retail sales, unemployment rate, GDP, which is quarterly. You'd think that Chinese news would be monstrous. Anyway, so we were going to look at what is the Beige Book. So the Beige Book, it's 8 times a year, like most of the Fed reports. And it's a mild impact, which I do agree. And it's, so what they're saying, it is anecdotal evidence, local economic conditions. I mean, so, they probably talk about manufacturing and all of the things that the Fed looks at, pricing, producer pricing, that type of data. And it's anecdotal is where they get the evidence. In other words, they're not doing a tremendous amount of research to develop this particular report, it sounds like to me. And it's always been a nominal mover. And, let's look at June. Let's look at June. Here is June Beige Book. So here's what happened. So the last 2 Beige Book reports were good. So it gave me the motivation to have a room for the Beige Book. And then, you sit down, you go through the videos and you go through everything. It's not enough consistency to really tell everybody, you know what, you should absolutely trade the Beige Book. Use this setup. It's just not the proper amount of consistency that is strong enough to trade. And that's the truth. 2 reports isn't generally good enough. If it were a report like flash manufacturing or something like industrial production, I would be a lot more comfortable telling people, you know what, let's give it a shot. I'm going to trade it live 100%. But even myself, I'm not, because of the history of Beige Book, its inconsistency, I'm probably not going to trade it. I really like to look at it, maybe, because what will happen is it'll have 2 or 3 consecutive decent moves, and then it won't move for 3 more periods. It's not like the FOMC statement. It's not like those types of reports where no matter what, you get a phenomenal move. Now, you won't always make money on every move, but again, you want to trade the events that give you the best moves. Because without a good move, you don't have a setup. Anyway, and it's interesting because back in June, I was trading, I upped the bracket on the Beige Book to 16. And we did what I think are targets that are way too big, 16 and 34, with a stop of 35. And the activation time, 2 o'clock. Now, I hope I fixed the activation time there. Yeah, good. Okay, I did. 1400. So watch the Beige Book. This is June. 16 tick bracket. And it goes down, it fills the bracket. And I'm guessing that this is going to reverse and stop. And that's what it did. So certainly that's not what you want to see from a report that you want to trade. Okay, and then I tried to do some after the news trade on it. So that was June. Then in July, I went to, I think, an 18 bracket. Let's see if I kept, maybe it was a 20. 2 o'clock. Yep, looks like a 20 bracket. I thought I went 18. Oh, all right, 15 bracket. That was in July. Smaller targets, 9 and 25. That makes sense. Stop at 25. and activation time again of 2 o'clock. And I'm pretty sure that's, yep, that was the setup. So there's 2 o'clock, and it had an awesome move. It was like a perfect move. Now, does the Beige book normally move like that? No, no. It was really unusual. So then we came back the next month. Now, I would not normally automatically say to everybody, okay, Beige book, go trade it live. Here's the setup. That's a wake-up call that maybe the Beige book is becoming tradable. It's not a wake-up call that you automatically jump. You know, if you have a big enough account, or if you don't mind taking risk, you certainly could jump in August or in September, when it was actually September, the next Beige book after July. You could jump in. It's, you know, it's all based on the kind of risk you want to spend. It's not complicated. If you have a big enough account, or you don't mind losing a few $100. So Beige book in September. Now, I don't think we had a room because this is a replay. And in September, it filled and it moved up. Okay. It had a decent move in September. And that's a replay. So you've got 2 months in a row where the Beige book has moved. So, you know, I'm being honest. For me, generally, I don't generally tell people, well, you definitely want to trade it live today, because 2 months is just not quite enough. It's just not quite enough. If it's 3 Beige books in a row, then you start trading. You know, can you do it on 2? Yeah. You know, you could, in theory, you could trade 1 contract today. Maybe look for a 20-tick target, right? It's not unreasonable, not unreasonable at all. Knowing full well that there's a very good possibility it may have a completely different reaction, because it has been not a report that has a consistent reaction. Just for fun, let me pick a random, if I have more videos on the Beige book. I do. Let's just pick a random Beige book in, today's October. So let's pick a random Beige book 2 years ago. Now, that's not a very good test, but who cares? Here's the Beige book 2 years ago. Oh, I wish it wasn't a replay. I'd rather show you a live Beige book. Now, that was see what happened there. It went up and then reversed and stopped us out. So that was not the kind of move we want to see. Let's, just for fun, that was 2 years ago. Let's pull it up from a year ago. Here's the Beige book a year ago. Charts look more like normal. Bracket of 15. Big targets 20 and 30. It's not a complicated setup, this report. You know, it's going to move the market or it's not. And the orders. Two o'clock event. The report comes out. Now, a year ago, it was not an immediate reaction. Okay, there's your news move, right? That's definitely a news move. And it's a news move, kind of reminds me of the move that fills and reverses, but we don't know that for sure. So it filled kind of at the top of the bracket, right there. And it had a continuation. All right. It hit a couple of targets. So, that's a year ago. So you had, but you could see what I mean. There's inconsistency. Let's just for fun, let's pull one more. We got time. Pull another random beige book trade. So let's pull the beige book. I don't want to go far back, 2018. Would you rather see a 2018 or another 2021? I think more recent makes more sense, doesn't it? Let's look at March. So here's March of 21. And let's see if we have an idea. Bracket of 15, targets of 10 and 30. All right. Similar to what I'd be doing today, believe it or not. There was a pretty volatile move before the report that day. You could see it. And there's a move down. Hits the first target. So it's like a 10 tick target. And then it changed direction and then continued back down. So possible hit one target. And then just for fun, since we're here, 2018 beige book. Look at our crazy charts. Oh my God. Looks like a Christmas tree. Using the color, using the zones with color, arranged trade with color. No wonder I couldn't see what I was doing. 2 o'clock. There's the range trade. So we're doing a range, not a breakout this time. Looks like about a 10-minute range roughly. And it breaks the range and it worked. Interesting, right? It hit the first target. Hit the first target and reversed. Or did it hit the targets was so tight together there. So it hits one target and then it looked like a decent little trade. So, I mean, if it's inconsistent, it certainly seems like it's inconsistent to the good rather than inconsistent to the bad, if you know what I mean. But I can tell you that that's only a random selection. It is an inconsistent event. The setup that I have at the moment is an entry at 1400. It's a bracket of 20. And I suppose, you could trade one target. Let's say you want to take extra risk today because you just want risk on a report. You have no idea what's going to happen. What do you want to risk? Do you want to risk $125? Do you want to risk $140? I think you have to use a stop somewhere around 35 in these markets if you're going to do it, right? If you're going to do it. So here's the thing. I think it's an inconsistent report. I'm trading Tesla and I'm going to trade Australia. So I'm going to set up a 2-contract trade on this 18-tick bracket. 18-tick bracket, and I got a target of 9. Let's see this, 11 and 29. 11 and 29 with a stop of 35. That would be my beige book test. That would be my beige book test. Okay. A bracket of 18, a breakout trade, an entry of 1400 hours Eastern time, target of 11, a target of 29, a stop of 35 sets. Ultimately, you're risking 70 ticks times $5, right? Roughly $350 on the trade if you trade it live. That's the setup. And I'm calling it beige. So one more time, it's a breakout trade. I'm going to check while I'm doing this. Let's check our time sync like we always do. Okay. And so this is the Beige book setup. Okay, so what is the Beige book setup? It's a breakout trade. We're going to activate the trade at 1400 hours. It's a bracket of 18. I've got one contract for 11 ticks, one contract for 29 ticks with a stop of 35 ticks. That's my Beige book setup. All right. Now, if the Beige book trades really well today, then I'll add it for next time. 3 in a row with the random, not bad looking events would be okay for me to start thinking about adding the Beige book. But I can only tell you that it has glimpses of nirvana. No one knows. I'll give anyone $1 million. Monopoly money if they know where that phrase comes from without Googling it. If you know where that phrase comes from, glimpses of nirvana, I will marry you if you're a woman, and I'll be your best friend if you're a man. Actually, in this world, maybe that's not going to hold. I'll be your best friend. Let's leave it at that. Glimpses of nirvana. The Beige book has had glimpses of nirvana the past 2 months, meaning it's had some good trading. Looks like good trade. So 1400 hours, a bracket of 18, targets of 11 and 29. That's the setup. Stop of 35. And that phrase is from a Procol Harum song called In Held 'Twas in I. Maybe the greatest piece, in my opinion, the greatest piece of music ever written in the history of humanity. No joke. Humanity's greatest musical composition. And for anyone that is interested, Google it. Here is exactly what it's called. And I'm being serious. To me, it is the greatest musical composition ever written. Okay, so let's check our time sync one more time. Time is, and my computer is in sync. Not one person has said a word during this whole trade room. Can you all hear me? Are you there? Is everybody there? What are you all doing? Lofta, very good, very good, very good. Robin Trower, you got it. Robin Trower was the guitar player in Procol Harum. Somebody on YouTube knows that truth. Churchy, I can see you. Yes, I can see you're typing. Arthur, it's called In Held 'Twas an I. In Held 'Twas an I. All right, so we've got 5 minutes till the Beige book. So it's not like there will be the Beige book is 0.2% versus 0.8%. It's not that type of an event. It's a report. So it's a Fed report that when we looked it up, we explained it's sort of a report based on economic conditions. And what's interesting is they say it's an economic report based on anecdotal economic conditions. I mean, why do they have a report where they kind of say that they're not doing a lot of research to come up with a report? I mean, that's almost what Forex Factory was kind of saying, that it's anecdotal information. So what does that mean? Do they call stores up? Do they call manufacturers up? How are they getting the data? It was just a little bit strange the way they categorized the news event. So let's take a peek at investing.com. We still have 4 minutes. How did they characterize the Beige book? So you can see there's a lot of reports during the course of an average day. They're loading slowly. Current economic conditions in each of the 12 federal districts. It gives, now this is better, it gives a picture of economic trends and challenges in the US 8 times a year, 2 weeks before each FOMC meeting. 2 weeks before each FOMC meeting. Now that's very useful information. And the Fed uses the report to help them in determining short-term interest rates. An optimistic outlook is bullish for the US dollar, and a pessimistic output is bearish for the US dollar. Okay? The ES dropped and now going sideways, waiting on the report. I'm not looking at the ES, and I hate to, I'm sorry to say, I don't watch the ES on this particular report. I don't know if that's based on, I'm not so sure this report's big enough for the ES to be having a big reaction to it prior to the report, to be honest. Because the NQ, you know, it's not going through the roof or dropping like crazy. It's not really doing much. The YM not doing much before the report. I'm watching the NQ, Churchy, on this report. I'm watching the NQ. That's what I've always traded on this report. You know, bonds tend to move often on Fed reports. But, you know, it takes a lot to get bonds to move also. And I'm being honest, the Beige book, it's just not that impactful. You know, this is one of those under the radar reports. That's the truth. This is an under the radar report. I'm spreading my charts because I didn't test the bracket size. So I'd rather have a big bracket and shrink it down rather than a teeny tiny bracket that we can't see. Arthur, I'm looking for an NQ reaction, yes. Now, see, look at the NQ responding now, or not responding, but being volatile. The NQ it's monstrously volatile these days. That's the truth, and has been for many months. Here's the news. Now, my concern would be to try to keep, I don't really see, there's the news move. That was the news move. Hit the first target. So it would have hit the first target. It's acting like it's going to reverse, but you don't know for sure yet. You don't know for sure. It could still push down. But there is a move. You can see that there is a response. Okay, there's definitely a response to this event, no question. Now, if I had moved my stop to break even, this could have been a one target trade, okay? A one target profitable trade. And that's the second Beige book we saw, anecdotally, that was a one target successful trade. You know, some trades, some events, just by their nature, have a small initial move, big enough to hit a first target, then they change direction, and then they go back in the opposite direction. So what I'm saying on this report, if we look at the video, my target, my first target was only 11 ticks. So you're looking at a $55 trade per contract, $55 per contract. Now, we don't trade the US dollar, Churchy, so I can't really comment on the US dollar. If there was great liquidity, you know, there is a US dollar future. You have to subscribe to ICE data, ICE data. And if you subscribe to the ICE data, then you can trade the US dollar futures. It's been a while since we've looked at US dollar futures. In the previous years past, the US dollar futures was horrible liquidity. I would guess that the liquidity is much better now, but still not great. And the big issue for a lot of people is you have to pay a lot of money, not a lot of money, but you have to pay over $100 a month for the data feed to get the US dollar futures if you want to trade them. So, you know, when we first started this company, we tried not to force people to have to subscribe to hundreds and hundreds of dollars of data. You know, the DAX was an extra 30 bucks. The dollar was an extra 100. You have to pay roughly 30 just for the normal indexes. So, you know, we haven't traded the dollar because of that. We tried it for a while, but it was a very long time ago, and the liquidity was lousy. And I don't know anybody who's got ICE data. Anybody out there have ICE data? Because that's what you need, ICE data, in order to trade the US dollar futures. That's the index you have to subscribe to. It's like 100, I think it used to be 100, Evie, you get it, 100, it was more than $100 a month. It is expensive for data. It is expensive for data. Let's look at the video real quick. Let's look at the video. So look, there was a one target trade, but you had to think on your feet, right? You had to think on your feet. I remember that, Peter. I do remember that. They kind of screwed up. The minute they changed the IWM, they destroyed the Russell. Don't you agree that the Russell was destroyed when they got rid of the IWM, if you know what I mean? The Russell, people loved trading IWM. It was IWM, wasn't it? But no, I don't know anybody that trades the Russell anymore. I don't know anyone. But in the old days, I used to know people that traded it. Before, you know, they sold that the index got sold to ICE, right? Didn't it get sold to ICE? And they raised the price of trading it. They changed the symbol. Once they start screwing around with something like that, it makes all the trades you used to trade and all the years you spent setting things up, and it renders it all meaningless, and you have to start over again. And people were really not happy. Here's the 2 o'clock Beige book. Bonds were, Mark, we had a good bond trade. It was a little bit scary, but it was good. Traded one contract and we made 8 ticks. And we have an alternative YM set up too that looks really good. So you could see Beige book And, you know, we didn't have big targets either. 11 and what do we say? 11 and 25 or 29. But, you know, maybe the beige book is tradable, folks. I think next period, probably give it a shot. It certainly looks like it's good for one target. It's had a couple of moves in a row. So I think next beige book, we'll do it live. I'll do it live. Quick reversal too. Quick reverse. But it does have a move, okay? You know, that's one of the things you need to determine. Does it have a move? And it does. It does. Okay? So look, I want to thank everybody for watching. If you go to, let me type something in on YouTube. If you register right now, folks, you can still register for our Tesla trade room. I got to give you the link. Give me a second. Let me just get the link. I know. Why don't I have it? I can only do so many things at one time. I only have so much time. Sorry. I'm human. How about that? I'm human. So if you type this into your browser, if you post this into your browser, you can do the Tesla trade on YouTube. If you're watching, if you want to come to our Tesla workshop for free, here's the link. I'm typing it in now. Okay. Type that into your browser, and you got to do it in the next half hour. And you can see us trade Tesla's earnings. All right. So, folks, any last questions now? We did the beige book. We traded bonds. We made an intelligent decision about oil today. We're trying to use our analysis in the best way possible today to help people to understand how to make decisions about what you should and should not trade. I mean, that's really what we're doing. And that's what we've spent some time doing today, making decisions on how to trade, which reports to decide. Okay. So I'll see everybody at 3:30. Now, someone was asking a question with the Tesla earnings. Are you focusing on stock or options? Neither. Churchy, we trade the NQ futures. So we have a unique way of trading earnings, some company earnings. Okay. So look at the market. Definitely had a tradable move to the beige book. So I would say that as of late, with all the attention on the Fed interest rates, I think the beige book should be a tradable book going forward for the next, at least the next 2 or 3 beige books. So figure on, we'll add a setup. I'll add a setup for it. Okay. And this is what you got to do. Sometimes, you know, you spend time, you don't make money, you don't lose money. You just figure out if it's worth trading. That's, you know, it's all part of the research that you got to do. All right. I'll see everybody at 3:30. Any questions? I don't see any last questions. Thanks everybody for watching us on YouTube. Hit the like button on your way out. And if you hit the bell, you'll know the next time we're streaming. We stream at least once a week, sometimes more. Okay, everyone. I'll see you in 3:30 for Tesla.